Now coming to the next question of financial statement without adjustment. Here we will prepare trading account to calculate the gross profit or gross loss. Thereafter we will prepare the profit and loss account to calculate the net profit and net loss, and after that we will prepare the positional statement, that is balance sheet. Okay, that is balance sheet. So in this question there is only one adjustment, that is closing stock. The information which is given outside the trial balance related to any account is the adjustment, information regarding the adjustment. Whenever there is an adjustment, this will be adjusted at two places. So closing stock is the adjustment because closing stock is given outside the trial balance. It may be at the bottom of the trial balance, or it may be at the bottom, or it may be the top of the trial balance, but not inside the trial balance. Then that closing stock is an adjustment. It's an adjustment. So this will be adjusted in two places while preparing the financial statement. One in the credit side of trading account by closing stock, and another we will reflect this account closing stock in the balance sheet asset side. Closing stock is the current assets. Okay. Now the question is, from the following trial balance of Sri Damodar Prasad as at 31st March 2020. So this is trial balance is given over here, and the both side of the trial balance is 1,62,300. Both side of the trial balance. Debit side informations are stock on 1st April 2019. It means it's an opening stock. Thereafter purchase, wages, return and so on. In the credit balance, discount received and so on is given. At the bottom of the trial balance, at the bottom you see prepare trading and profit and loss account for the year ended 31st March 2020 and balance sheet as at that date. The stock on 31st March 2020 was 22,000. This is the closing stock which is given outside the balance sheet at the bottom of the trial balance. Okay. So closing stock is the adjustment. Only this one. Rest of the account which is inside the trial balance is not an adjustment. So this will be reflected at one place only. Trading account or profit and loss account or balance sheet at one place. So let's start with that. So start with that format first. So your format will be in the books of Sri Damodar Prasad. We will write the name of the proprietor first. So Damodar Prasad, trading and profit and loss account for the year ended 31st March 2020. For the year ended 31st March 2020. So this side is debit and your right hand side is credit, particular amount in rupees, particular amount in rupees. This is the format of a balance sheet. Balance sheet is prepared as at 31st March 2020. Balance sheet is prepared on a particular date. Okay, as at this date, this side liabilities and this side the assets we will write in the balance sheet. So start with the trading account. First one is what? Trading account. What we write in the trading account? We start with the opening stock if it is given in the question. Thereafter we write the purchase, and purchase return will be deducted from that, and all direct expenses in the debit side, and credit side by closing stock, by sales, or if the sales return is given then we will write the sales return. So start with that. Stock is given in this question on 1st April. So opening stock 1st April, stock on 1st April 2019 is the opening stock. Means 1st April 2019 is your opening stock, 1st April 2019. So how much it is? It is 10,000 is the opening stock. 10,000 is opening stock. Okay. Thereafter you come to purchase. Purchase is the direct purchase. Purchase of what? Purchase of raw material. So purchase, when we are going to write the purchase, we have to see purchase return is given in the trial balance or not. So when I am seeing the credit side, so return outward is the purchase return. So purchase amount we will write in the inner column. 58,000 is the purchase. We will write in the inner and we will deduct less purchase return, means return outward. Return outward is called purchase return. Return outward. So return outward is what? It is called purchase return. Return outward is 2,600 is the return outward. So we will deduct it, return outward. So final figure is 00475 and 55,400. 55,400 is the net purchase. This is what? Purchase less return outward. This is called net purchase. Thereafter you come wages. Wages is the direct expense. You write the wages. It's a direct expense. So wages is how much? Wages is 4,700 is the wages. Next you come after wages, carriage on purchase. Carriage on purchase. Carriage on purchase means purchase. Carriage on purchase means carriage inward is called carriage on purchase. Carriage paid at the time of purchase. It is carriage inward. Carriage on purchase. So carriage on purchase is how much? Carriage on purchase is 2,360. 2,360 is carriage on purchase. There is one carriage on sales. Carriage on sales means carriage outward. This will be reflected in the profit and loss account. Okay. Thereafter you see, after carriage on purchase, next direct expense is there is no other direct expense. You come to the credit side of the trial balance by sales. Sales is given 98,650 is the sales, and you deduct the sales return. Sales return means return inward is called sales return. You see in the debit side, return inward is given. Return inward is called sales return. Return inward. You see this balance in the debit side of the trial balance. You will get it in the sales is credit. So return inward will be on debit side of the trial balance. So return inward is 3,520 is the return inward. 3,520 return inward. Okay. So deduct the return inward. So next amount is 0,315,9. 95,130 is the net sales. And last you write the closing stock, which is given outside the trial balance. At the bottom of the trial balance, it has outside the trial balance, in the bottom, the information has given regarding the closing stock, that is 22,000 is the closing stock at the end of the financial year. Stock at the end of the financial year. Okay. Now we'll see which side total is more and which side total is less. Credit side is more, so do the total of the credit side first. Do the total of the credit side first, and you write the same amount in the debit side. So this side total is 0,317 11. 1,17,000, 1,17,130. 1,17,130. 1,17,130. Now we will find out the difference. That difference we will call gross profit. Gross profit. Credit is more and debit is less, then it is called gross profit. Gross profit, where this will be transferred to profit and loss account. So I am simply writing over here carried down. This will be carried down to where? Profit and loss account. Now we will find out the difference. 0, 6 and 7, 13, 1 carry. 5 and 7, 12, 13, 14, 15, 15 and 6, 21, 2 carry. 7, 11, 12, 13, 13 and 4, 17, 1 carry. 6, 7, 7 and 4, 44,670. 44,670 is the gross profit. This gross profit will be brought down in the credit side by gross profit brought down. This will be brought down in the credit side because credit side total is more than the debit side total. This side total is more and this side is less. This is the difference amount, gross profit. Direct income is more and direct expenses is less. So difference known as gross profit will be transferred to profit and loss account. Now from here we will start the profit and loss account. So we know that in the profit and loss account what we write? Debit side, office and administrative expenses, selling and distribution expenses, financial charges, all other indirect expenses, miscellaneous expenses, or any loss, okay, any revenue loss. And credit side will write all indirect income. So come with the, we'll see from the top the all indirect expenses from the top. So carriage on sales, so we'll write with the carriage on sales. Carriage on sales means carriage inward is also called carriage on sales. It is what? It is return outward. Carriage on sale is called return outward. So return outward is direct expenses. This is 710 rupees is the return outward carriage on sales. Next is office salary. Office salary. So see the office salary is how much? Office salary is 4,800 is the office salary. Now coming to the next, after office salary, rent and taxes. Rent and taxes. This is indirect expenses. This is related to office expenses. Rent and taxes is related to office expenses. Next is after rent and taxes, next indirect expenses is bad debts. It's a loss. Bad debts is a loss. Bad debts, okay, bad debts is how much? It is 600 is the bad debts amount is 600 rupees is the bad debts. Next is discount allowed. Discount allowed, it is related to selling and distribution expenses. Discount allowed, 640 rupees is the discount allowed. Next you come scooter repairs. Scooter repairs. Scooter repairs. The scooter repairs is how much? 850 is the scooter repairs. It is related to traveling expenses. Next you see commission. Commission, if it is in debit side, it means commission paid. Commission amount, if it is in debit side, this indicate the commission paid. It's a selling and distribution expenses. Commission we pay at the time of selling, so it comes under the selling and distribution expenses. Then interest on X loan, interest on X loan. Firm has taken the loan from X and the interest which is given on that amount is 1500. Interest on loan 1500. So these are the indirect expenses. Now you write the indirect income. For that you see the credit side of the trial balance. You see which side? Credit side of the trial balance. So first one is discount received. Discount received. At the time of payment we receive the discount. It's an indirect income. Discount received is 750 is the discount received. After discount received, next is commission. Commission credit side indicate that commission received. Commission credit balance indicate what? It's a credit balance. Indicate what? It indicate commission received. And commission debit balance indicate that commission paid, expense. Okay, that's it. Only this much information is there. Now what we'll do, we'll find out the difference amount, which side is still the credit side is reflecting more. So do the total of the credit side first. We'll do the total of credit side, and thereafter what we'll do, we'll find out the difference of credit and debit, and that difference will be transferred to profit, and that difference will transfer to capital account. So this side total is 0, 2, 1 carries 14, 15, 16, 1 carry 5, 6, 4, 46,620. 46,620. This is the total I have written in the debit side as well. And now the difference is net profit. This difference indicate the net profit, and this will be transferred to net profit, transfer to which account? Capital account. Net profit will be transferred to capital account, and this is balancing figure. This we have calculated through the balancing figure. So see the balancing figure: 0, 1 or 4, 5, 5, 10, 2, 12, 1 carry 8, 8, 16, 4, 20, 26, 32, 40, 48, 48 and 5, 53, 53 and 3, 56, 5 carry 9, 10, 11, 12, 13, 13 and 3, 16, 1, 33,320. 33,320 is the net profit. This net profit we will transfer to capital account. Net profit will be transferred to which account? Capital account. Net profit will be transferred to capital account. Is it clear? Now come to the balance sheet. Trading and profit and loss account is completed. Now we will enter in the balance sheet. This side liabilities, this side assets. So start with the capital. Balance sheet. Here we will start with the capital. Capital is given in the credit side of the trial balance. Capital is 40,000 is the capital. This is the credit balance. So you see in the credit side of the trial balance, and here you add net profit on this capital. Net profit we will add to the capital. So net profit is how much? Net profit we have calculated 33,320. 33,320 is the net profit. If there is any drawings, that will be deducted. So see in the debit side, any drawing is there? Drawing, see in the debit side. Yes, drawing is given in the debit side at the bottom in the trial balance. So you do the total first. 0, 2, 3, 3, 7, 73,320, and deduct the drawings. Drawings have a debit balance. Drawings have a debit balance, that is drawing is given in the question is 6,000. In the debit side, you see in the debit side of the trial balance. After that you write this amount. This is your closing capital. This is what this indicate the closing capital. 67,320 is the closing capital. Now coming to the credit side, bills payable is given. Bills payable is given. It is bills payable. It's a liability. 3,000. It's a current liability. Bills payable is current liability is 3,000. After bills payable, there is a sundry creditors is given. Sundry creditors. Credit side of the trial balance you seek. Sundry creditors. Sundry creditors is 5,600 is sundry creditors. Thereafter you see creditors for rent. Creditors for rent means outstanding rent. Creditors for rent means outstanding rent. It's a current liability. Creditors for rent is 500. Creditors for rent. Next is loan from X. Loan from X. Firm has taken loan from X. So loan from X, it's a liability 10,000. These informations is given in the credit side of the trial balance. Now coming to the asset side. So from the top you see what are the assets from the top. Okay. So bank balance is given. You write the bank balance. Bank balance, if it is a debit balance, it means it's a assets. Current assets. Bank balance is how much? Bank balance is 7,820 is the bank balance. 7,820. Thereafter you come to the after bank balance. Next is land and building. Land and building. Land and building. It's a fixed assets. Land and building is a fixed assets. Under fixed assets is it tangible assets. So land and building is 20,000 is the land and building. We have to write in the asset side. It's a assets. It's a fixed assets. Fixed tangible assets. Thereafter you come after land and building. Next is scooter. Scooter is also fixed assets. Scooter. Scooter is how much? It is 6,600 is the scooter. It's a fixed assets. Fixed tangible assets. After scooter you see the BR, bills receivable. BR means bills receivable. In short we write BR, bills receivable. It's a current assets. Bills receivable is 3,500 is the bills receivable. After bills receivable, next is sundry debtors. Sundry debtors. It's a current asset. Sundry debtors is current assets as well as liquid assets. Both current and liquid. Sundry debtors. Okay, sundry debtors. So sundry debtors is how much? Sundry debtors is 25,400. 25,400 is the sundry debtors. After that you see, is there any other assets? Drawing is already deducted from the capital. Okay. Closing stock which is given in the trial after the trial balance, it's an adjustment. This will be reflected at two places. So closing stock is 22,000 is the closing stock. Closing stock is 22,000. So see in the debit side, is there any other information related to assets which we have not written? We have written all these assets and liability. Now we will do the total of this. Total. We will do the total of assets and liability. One more information, that is cash in hand. Cash in hand. Cash is 1,100 is the cash balance. Now we will do the total of both sides. 0, 2, 3 and 6, 9, 9 and 4, 14, 4, 1 carry, 8, 9, 10, 11, 16, 6, 1 carry, 8, 86,420. Now this side is 0, 2, 0, 2, 8 and 4, 6, 8 and 6, 14, 19, 23, 24, 2 carry, 9 and 6, 15, 18, 23, 23, 24, 25, 26, 6, 2 carry, 2 or 2, 4 or 2, 6 or 2, 8, 86,420. This is the total of the balance sheet. This is what? This is total balance sheet. Balance sheet total is this. This is the total balance sheet. Okay, balance sheet total is 84,420. So capital, you add the net profit, deduct the drawings. This is the current liability. This is also current liability. Current liability, creditors for rent means outstanding rent. Loan from X. Bank balance is the most liquid assets. Bank balance, current assets. Bills receivable is also current assets. Sundry debtors is current assets. Closing stock is current assets, and cash is current assets. These two are only non-current assets, means fixed assets. Land and building, fixed assets, fixed tangible assets, and scooter is also fixed assets and tangible assets. So both sides of the balance sheet must be matched. Is it clear? So balance sheet is prepared on a specific date, that is as at 31st March 2020. These are the assets and these are the liability as on this date. Okay. So adjustment number 1, adjustment, financial statement with adjustment. What is adjustment? The entry which was not recorded before the closing the trial balance, or entry which is recorded one side, or some errors are there, that has to be included while preparing the financial statement. That all these things must be taken into account, which was not recorded, which was recorded but some errors was there, some errors is there, then that has to be adjusted while preparing financial statement. So first one is closing stock. Any information which is given outside the trial balance is our adjustment. First is closing stock. First is closing stock. Closing stock will be reflected in the credit side of trading account by closing stock. This side we will write closing stock in the credit side of trading account, this side. And balance sheet we will write in the asset side. Closing stock we will write in the asset side if it is in the adjustment. Means outside the trial balance, if the information of closing stock is given, then it's an adjustment. So this will be adjusted at two places. Closing stock, credit side trading account, at cost or market price, whichever is less, and in the balance sheet asset side, it's a current asset. The journal entry for the closing stock will be closing stock account debit, closing stock account debit, to trading account, closing stock account debit to trading account. This is the adjustment entry. Closing stock account will be debited and credit will do the trading account. Now next adjustment is outstanding expenses. Means expense is due but not yet paid. Outstanding expenses. If information of outstanding expenses is given outside the trial balance, then it's an adjustment. Outside the trial balance. Okay. For example, outstanding expenses, outstanding wages is given. Outstanding wages is given in the trial balance. After the trial balance, outstanding wages, suppose it is rupees 2000, and outstanding salary is rupees 5,000. This information is given, these two information is given after the trial balance, okay, outside the trial balance. So then this is an adjustment. So what we will do, wages is reflected in the trading account debit side, so you write the wages over here which is given in the question in the trial balance. Write the wages inside which is given in the trial balance. Suppose in trial balance wages is 22,000. 22,000 is wages and salary is 55,000 is the salary given in the trial balance. So what we will do, this wages 22,000 we will write it in the inner column 22,000 and we add the outstanding wages. This wages will be added, we will add it. Outstanding wages we will add. So outstanding wages is 2,000. So wages in the outer column will be 24,000. We know the wages is shown in trading account, it's a direct expense. So wages which is given in the trial balance, you write it directly that amount in the inner column, and outstanding wages which is given outside the trial balance, you add this amount. So total wages is this much. Same thing you do with the salary. Salary is indirect expense and it is shown in the profit and loss account. So write the salary in the debit side which is given in the trial balance, and what you do, you add the outstanding salary. O/S indicate the outstanding salary is how much, which is given in the adjustment. This is adjustment after the trial balance. So you add outstanding salary 5,000, so it is 60,000. Now total salary after adjusting the outstanding salary is 60,000. Both outstanding salary or outstanding wages will be shown in the liability side because it is due but not paid. So it comes under the outstanding expenses. Comes under which heading? Outstanding expenses. Outstanding wages 2,000 and outstanding salary 5,000. So total outstanding expenses is 7,000. You write in the liability side. This is outstanding expenses. Total outstanding expenses is 7,000. 2,000 is the outstanding wages and 5,000 is the outstanding salary. Outstanding salary means salary due but not paid. Outstanding wages means wages due but not paid. If you want to know the journal entry of this, outstanding salary account debit to outstanding salary. This is the journal entry, outstanding salary. Salary account debit to outstanding salary, this is 5,000. This is the journal entry for outstanding salary. Outstanding wages account debit to outstanding wages. How much it is? Outstanding wages is 2,000. So entry will be, adjustment entry will be wages account debit to outstanding wages 2,000. This is the adjustment entry for outstanding expenses. Outstanding salary account debit to outstanding salary, this is the adjustment entry. And for wages outstanding, wages account debit to outstanding wages, this is an adjustment entry. Okay, in this way we adjust in the financial statement. The next adjustment is related to prepaid expenses. What is prepaid expenses? Expenses paid in advance. If this information is given outside the trial balance, then this is an adjustment. How will adjust it? Suppose in the trial balance salary is 26,000 and rent is 14,000. And in additional information these two has given in adjustment is this. Prepaid salary 2,000 and prepaid rent is 4,000. How will adjust it? You know the salary and rent is reflected which account? Trading or profit and loss? Salary and rent reflected in the shown in the profit and loss. It's an indirect expense. So write it to salary over here. First you write the salary which is given over here in the trial balance 26,000, and prepaid you deduct it. Prepaid salary you deduct from the salary given. So prepaid salary is how much? 2,000 is the prepaid salary. 2,000 you deduct it. Okay, 2,000 you deduct the prepaid salary. So 2,000 you deduct it, less. So outer column 24,000. 24,000 in the outer column. Same thing you do with the rent. Rent is 14,000 is the rent given in the trial balance, and you deduct prepaid rent. You deduct the prepaid rent. Prepaid rent is how much? It is 4,000. So deduct the prepaid rent. Prepaid rent you deducted. Here you deduct the salary. So prepaid rent after deduction it is 10,000. In the profit and loss account debit side, prepaid rent and prepaid salary is the assets. Prepaid rent you write in the asset side, prepaid rent 4,000, and prepaid salary is how much? Prepaid salary is 2,000. You write it in the asset side. Expenses paid in advance. It's an asset. It's a current assets. It's a current assets. So what we do with the prepaid expenses? Prepaid expenses which is given after the trial balance, outside the trial balance, then it's an adjustment. So what we'll do, prepaid expenses will be deducted from that particular expense to know the actual expense of the current year. So salary which is given in the trial balance 26 will deduct the prepaid. Prepaid means for the next year, paid in advance. We have done salary is paid for the next year. So this is not the expense of the current year, and here we are going to calculate the net profit of the current year. That's why we have to deduct it. Similarly, we do with the same thing with the rent. Prepaid rent is deducted. Why prepaid rent is deducted? Because prepaid rent is related to the future year, and we are going to calculate the net profit of this year. So expenses of the next year we will deduct it, so that then only we will get the or calculate the true net profit. That's why we have deducted. And as we have paid the money in advance to the employee as a salary or to the rent to the landlord, this become the assets for us, because next year we are not going to pay this amount. So till that this will reflect in the asset side of the balance sheet. Okay, asset side of the balance sheet. Journal entry will be very simple. Prepaid rent account debit. Journal entry for this will be prepaid rent account debit to rent account. This is the adjustment entry. Prepaid rent is how much? It is 4,000. Prepaid rent account debit to rent account, and for prepaid salary entry will be prepaid salary account debit. Prepaid salary account debit to salary account. This is 2,000. This is the adjustment entry, and this is adjusted in the financial statement like this. Prepaid salary will be deducted from the salary of the trial balance which is given. Actual salary for the current year is 24, and actual rent for the current year is 10 after deducting the prepaid. Prepaid means expenses paid in advance. It is for the next year, next financial year. Okay, so while calculating the profit of this financial year, we will deduct it to know the actual expense of this financial year. Then only we can calculate the true net profit, or we can see the true financial position of the business. Okay, now coming to the next adjustment, accrued income. Accrued income means income earned but not yet received. That income is called accrued income. and if the information regarding the accrued income is given outside the trial balance, then it's an adjustment. Then this will be adjusted at two places. So accrued income, this is the fourth adjustment what I am going to discuss. Accrued income means income earned but not yet received. Okay, and this information is given where? This information regarding the accrued income is given outside the trial balance, then it's an adjustment. So suppose the rent in the trial balance credit side, rent is 10,000. Rent, if it is reflecting in the credit side of the trial balance, it means it is the rent income, rent received. And related to that rent, an adjustment is given. Accrued rent is 2,000. In adjustment it has given. Then what we'll do, we know that the rent is reflected, we'll write the rent in the profit and loss account credit side. It's an indirect income, rent. You write it in the inner column 10,000 rent, and you add accrued income, accrued rent. You add the accrued rent. That is, how much it is? Accrued rent is 2,000 is the accrued rent. So outer column it is 12,000 is the total rent. And in balance sheet, accrued rent is assets. Accrued rent is what? It is a current assets, accrued rent, earned but not received. It means that amount we will receive, business will receive in the next year. So when this amount will be received by the business or realized by the business in the next year, it's an current assets. And to know the actual rent of the current year, so this is the rent, and accrued rent we have to add it because rent is earned in this year, however the amount is not received, so you have to add it. So total rent is 12,000. So entry will be the for accrued rent or accrued income, accrued rent account debit, accrued rent account debit to rent account. This is the journal entry for adjustment, journal entry related to adjusting journal entry, adjusting journal entry, accrued rent account debit to rent account. Okay, similarly one more example, suppose interest, it is given in the credit side 2,000, and additional information, accrued interest has given 250 rupees. What we'll do, we write the interest in the credit side of profit and loss account because it's an indirect income, and add accrued interest. Accrued interest is 250. So total interest is 2,250 is the total interest. And you write the accrued interest over here in the asset side. It's a current asset, accrued interest. In the asset side, that is 250. And entry will be accrued interest account debit to interest account. To interest account. Accrued interest to interest account, that is 250. This will be the journal, adjusting journal entries. Is it clear? Adjusting journal entry. Accrued income means income earned but not yet received. If the same is given inside the trial balance, accrued rent inside the trial balance, then directly we will write in the asset side. We are not going to do the adjustment in the profit and loss. If it is inside the trial balance, then it's not an adjustment. Then what we will do, we directly write in the balance sheet asset side. And if it is in the outer side, then it's an adjustment. Then this will be adjusted at two places. On that particular income we add it. Here we add the rent, accrued rent to rent account, and interest, accrued interest to interest account, to know the total interest on total rent, and that will be reflected in the balance sheet as well. Okay, so we have discussed the closing stock, adjustment related to closing stock, outstanding expenses, prepaid expenses, accrued income. Next adjustment is earned income. Unearned income means income received in advance. Income not earned, but the amount is received in advance. Okay, Suppose in the trial balance rent is 10,000 in the credit side. This is the rent received. This is the indirect income. Okay, rent in the credit side is 10,000, and in adjustment it has given earned rent or rent received in advance is 3,000. Then what we'll do, we write the rent rupees 10,000 and deduct unearned rent will be deducted from that amount. Unearned rent, rent which is not yet earned but we have received the amount. This will be deducted to know the actual rent of the current year. Actual rent of the current year is 7,000. 3,000 is the rent what we have received. Actually that is not earned by us, means income received in advance. So when income received in advance, this is not the income of the current year, it's an advance money. So advance money is not our income, so we will deduct from that amount, and this become the liability. Unearned rent will become the liability for us. Unearned rent will become the liability for us. Rupees 3,000 is the liability for us. This will be shown in the liability side. It's a current liability. Entry will be rent account debit to unearned rent. Unearned rent. This will be the entry, rent account debit to unearned rent. Means accrued unearned income account debit will be credited and income account will be debited. So rent is the income that will be debited by us. To unearned rent will be credited in the adjustment entry. The amount will be 3,000. This is the adjusting entry, adjustment entry. Is it clear?